What's up, swing trader? Snacks here. We're going to jump in and do our watch list for Tuesday, November 25th. Let's keep this one short today, guys. Not much has changed structurally. We'll do a quick review of our levels here on SPY. We'll look at RSP, some sectors, and a quick review of some weekly triggers I'm looking at if we do get confirmation. If we do invalidate this lower high and then get a pullback that holds above it, confirmation. And we will review quickly a few short ideas if we do stuff at this level. But I really just gave it to you there in a nutshell. We are still looking at the SPY here. We've got our lower high that we need to invalidate. So if we continue to push up, if we stuff below it, okay, this is a short. If we invalidate this lower high and then pull back and hold a level above it, even if we breach a little bit but quickly get back above it, okay, then we can begin to trust our longs as we look to clear these additional levels. As we keep breaking them and holding them, we can build in our conviction of an idea of a push into year end. And looking at the RSP here, again, guys, I know the last few days have felt really nice. We've gotten a bounce, but look, we're just popping right up into resistance, and we still have plenty of room to make a lower high below and roll over. And if that happens, it is a short. Okay, short term, right? I'm not calling the next 3 years, right? But the short term price action is bearish. Lower lows, lower highs, okay? And if that continues, then we have opportunity to the downside. I'm okay with two-sided price action, guys. We have setups that work to the downside as well because we are in a trend. If we continue getting follow through, then we can play our trend continuation patterns, which is 5 out of the 6 of my models. And we'll jump over and look at market breadth. Guys, we still have 50% of stocks below their 50-day moving average. We're barely over the high-low index. I'm still not in love with this market breadth, and to me, it's still signals that we need to have a bit of caution. Looking at internals here, again, nothing overly impressive to buy side action. Monday was pretty attractive, but yesterday was a little less convincing, right? So again, caution, guys, caution. Jumping into our ETFs, one thing I do like that I'm seeing, if we're going to suggest risk on has begun again, or an appetite for risk, you look to see things like ARK, which is Cathie Wood's innovation ETF, a lot of highly speculative pre-revenue names in this ETF. So when you see this thing leading the charge for the day, generally it's a decent sign for risk appetite, for risk on. So, having 2 nice days there on ARK is a decent signal here. And then having things like consumer staples be at the bottom of our list of leaders for the day in ETFs, getting this guy back down to the bottom, not a bad signal. But clicking through this thing quickly here, these are bearish looking charts. These are all quite toppy looking, guys. Biotech does have a good look to it. It continues to lead another speculative or rate cut friendly sector, right? If we do end up getting those December rate cuts, things like biotech, small caps, all of that stuff will do well. If money is cheaper to borrow. But look at tech here. It is catching a bid, but guys, we're just popping right up into resistance unless invalidated, right? We need to invalidate those levels, hold them, and push higher, and we could buy this move, okay? I would probably only do it quarter, maybe half size, but very likely only quarter size, okay, until we really start to clear higher levels. Then again, we can grow in our conviction for a move higher into year end. But just continuing to click through these things, really all this looks like to me is a dead cat bounce, okay? We've been selling off and these things are popping up, and if they get faded, then it's a short, okay? It just simply is. We've got medical devices, the healthcare sector as a whole, healthcare, biotech, pharmaceuticals, medical devices, all of that does continue to look good. I've got a healthcare list here. If you guys want it, ask for it down in the comments. I will drop the link in your comment to my list here of health sector stocks that are looking pretty good. A little headline sensitive right now. Trump is dropping some stuff about it, more insurance side of things. But it does remain a headline sensitive sector, but it's holding up. Jumping back over here, let's look at healthcare itself. How are we looking there? Yeah, it is holding up, definitely showing relative strength. So you've got to be looking at it, and if you need a list of leaders in those sectors, then holler at me down in the comments. And then quickly looking at our weekly trigger watch, we've still got things like Hood, Shop, BE, robotics company, Symbiotic here. A lot of these things that are still setting up on the weekly chart. We've got Futu, Reddit, a bunch of good stuff here. Same thing, guys. If you want it, comment down below. I will give it to you. And if you guys want these charts here as well to keep a at a glance eye on market breadth, this is a fantastic way to do it. The top box here is stocks above or below their 50-day moving average is the blue line, 200 moving average is the gray line, and then this is stocks making new highs versus new lows. We've got a zero line here, and we've got a midpoint up above, and then I just like to throw the SPX. Sometimes I do switch this over to the RSP, and we look for divergences in those things. For example, going back to the SPX, and then you've got the crosshair, right, that it goes over each chart. So let's align the dates and tighten things up just a little bit so it can make this example easier. All right, so if you look at times when things got nasty in the market, I'm going to hover here on the SPX. Last time we rolled into a bear market, right, you can see how the divergences were sort of showing beforehand. As we were getting toppy in the market, we began to roll in the stocks over their 50 and 200-day moving averages. That is a bearish divergence, okay? And you sort of got an early signal here 8 months ago when we rolled into the tariff lows, and we were also calling this over the past 2 months as we were beginning to roll down again on this top chart, as well as we were pushing higher. That is a bearish divergence. In a nutshell, guys, if you'd like to learn more about reading market breadth, then I do encourage you to join me in Bootcamp. If you're struggling in these markets, 2025 has been a very opportunistic year, and if you're struggling, stop setting your money on fire, guys. Consider hiring a coach, and I've got a 6-day bootcamp where you work with me directly, one-on-one. For 60 days, I teach you all 6 of my models that outperform the market. I teach you to read market breadth, and I teach you proper risk management, so that with those other 2 things, you're not just making money, but you're keeping it and compounding it over time with proper risk management. So guys, that's really all I've got for you here today. I lied. Let's look at a few short ideas. We've got this guy here jumping over to the daily. Got a bit of a head and shoulders pattern playing out. We've got our neckline here. If we pop up into this with a few more days of continued strength into the market and fail it, okay, at that point the 9 EMA would be somewhere in that world. That is a short, and we can target recent or lower lows dependent on if we want a 2 or 3 to 1. AMSC is a semiconductor that we're waiting for. You can see exactly that. I'd like to see this guy jump up into its 200-day moving average, fail. At that point, the 9 EMA would be somewhere in that world. We would short that move looking for recent or new lows. Okay, so we've got a whole list here of names. This is a box breakout to the downside. A box breakout is one of my 5 continuation patterns. But it works to the downside as well, guys. You look for 6 or more months of sideways consolidation. You let it break out of the box, pull back, retest it, and then you take this puppy down if it fails that retest. So yeah, guys, that's it. Just don't force anything right now, guys, okay? We've not invalidated the downtrend that we are clearly in. Let me get some of these drawings out of the way. And until we do so, guys, until we invalidate this, at least this 674 lower high and start to build above it, then we're risk environment C to the upside, and we're actually looking for that fail. Look, I'm not a mega bear. I certainly prefer upside price action, but if we fail here and roll over, it is a short that I'm willing to take back through the 9. It's a triple R through the 9 on the index, and then we'll roll into our dirty dog short list and look for some boys to take out back. Guys, stay safe, manage your risks. Let's go make some money. I'll see you soon.